received, Mr. Paliwal, by SIDBI on 31st of March for fund of funds out of budgetary allocation, because that would enable us to give real long-term, say maybe 10 years, 12-year funds, because earlier dispensation, India Aspiration Fund, we were limited by a 7-year period. And of course, we are going to make the startup portal available on mobile handsets soon. The other, big flash was Stand Up. 5th of April, the Prime Minister of India launched the scheme for Stand Up. Stand Up, if you may recall, was announced by the Prime Minister on 15th of August during his address to the nation from the ramparts of Red Fort, where he said that if every bank branch could enable a fresh business to be started by Dalits, Adivasis, or one by women. So he said about the 125,000 branches, so we will have soon 125,000 fresh entrepreneurs belonging to either Adivasi or Dalit categories, and another 125,000 businesses started by women. So the detailed scheme, which now says that this would be by way of fresh greenfield units with loan size which would be above Mudra, because Mudra was already there. And if we include Mudra, this number would be there very soon. So we wanted to make a distinction. So this is 10 lakhs to 1 crore is the size of loan put there. And more than the announcement of scheme, he announced a mechanism for hand-holding, because these are businesses which are not existing. So somebody has to make these businesses happen. Somebody has to help grounding of units. Something on the lines of what Mr. Paliwal said about credit counselors, but I think it goes much beyond that. So the Prime Minister also on that date announced a portal, Stand Up Mitra, standupmitra.in. And I'm happy to tell you, Mr. Paliwal, that the Udyami portal which you spoke about is actually driving Stand Up Mitra. So there's a caption on the portal which says that this engine can be used by any entrepreneur. Of course, the hand-holding may be limited to the certain categories, but hand-holding agencies which want to address any other MSME are also welcome to do there. So the portal provides for not just the loan application which Mr. Paliwal spoke about. So yes, you can make a loan application in the IBA approved format. IBA has been our advisor in building this portal, and then that he can indicate the names of the banks. The applicant can indicate up to 3 bankers. So to the first banker, it immediately goes into the system and it can be tracked. The other 2 bankers, as well as any other banker, can then pick up the application and start processing. So effectively, for the first time, we have a national loan marketplace. So any SME can go there, of any size, of any category, give a request for hand-holding. Hand-holding could be for skilling, hand-holding could be for entrepreneurship training, hand-holding could be even for utilities, workshed allocation. Almost 30,000 or rather 32,000 agencies are listed in the portal, which you can choose from. If you register and choose the agency, the mail would go to that agency, and this is to be monitored as per the announcement made on that date for the stand-up by the district-level credit committees, at the state-level credit committees. SIDBI centers, including NABARD centers, would constitute what we are calling as the connect centers. So the job of connect centers all over India would be to link entrepreneurs to the right agency if they are not able to get the response from the agency. Sir, I think the concept of credit counselor, once the accreditation framework which Reserve Bank has announced by September would be ready, I think this portal is already there to act as a receptor for this. I was also asked to respond to the TREDS announcement. I'm very happy to say that SIDBI and National Stock Exchange joint venture, which is Receivable Exchange of India, the company has been formed. I'm one of the founding directors, and it is in very advanced stage of platform testing and development. So we hope to reach Reserve Bank of India for the permission to start, hopefully within a fortnight. What it would do, it would enable the purchasers and sellers to come together on platform, offer the receivables there. As per the RBI guidelines, once the purchaser agrees to come to the platform, then it is without recourse, which means if a financier has given money against such a receivable, the payment cannot be denied on any other ground. So it gives the force almost of a bill of exchange. So we hope to start business soon, and this, I think, there are two other licenses also who are also, I believe, that are progressing further, and it requires close working with RBI on a number of smaller issues, operational issues. Only request is that the corporates present here, they have to look at this as a game changer. Our only, I would say, the hump to cross over for this exchange would be corporates coming and agreeing to be a part of there. So why should they? Why should they agree to a discipline? The reason is very simple, sir. If you have all MSMEs utilize this, it actually is going to really bring down the supply chain costs. So at an individual level, we may differ, but I think if collectively, if a chamber or if an industry body really comes forward and says that this is a progressive thing we need to do, because somehow factoring has failed to happen, despite so much being done by the central bank, SIDBI, the government, we've passed a law, but it's not gone up to the scale which we needed. This is electronic factoring. This is the modern age factoring, and this has been styled by us strictly as per a very successful model by NAFINSA, which is SIDBI counterpart in Mexico. And recently their representatives are here. So they actually trained our team, SIDBI NSE team went there. We received know-how from them. And there it continues to get stronger and stronger. 60% of the trade in Mexico today is covered by this exchange, sir. So this would be a big game changer, I hope so. We also launched a scheme, or rather a couple of schemes to supplement Make in India program. One is called SIDBI Make in India Fund, which is out of our own monies. And then second is SMILE, SIDBI Make in India Loan for Enterprises, which includes soft loan for SMEs, falling in the Make in India, arena, going up to 20 lakhs. And then loans also in concessional terms for the first 3 years. The idea is to provide small concessionality to give a kickstart in the early period. Apart from that, we launched our own mobile application, SIDBI Mitra. I would encourage everybody here to look at it, download it. We just launched it on the iPhone also. It's available on, and it's been available on Android for a couple of months. First, we were pushing it to our own clients who can now see their loan details, who can talk to the relationship manager within the bank through this, locate nearest branch, look at SIDBI schemes, and do a number of self-service things. So you need not call SIDBI office if you want to demand advice copy or statement of account or a host of things. But now we have opened it to all SMEs, and this SIDBI Mitra is also a window, going to be a window for Stand-Up Mitra and Startup Mitra. It's been received quite well, and we recently had a conference of DFIs of SMEs from the world, called the Montreal Group. It has members from the Americas, from Europe, from Asia, and they felt that the response from them was they would also like to emulate. This appears to be first of kind to them, even though to me it appeared that in India we are so much used to technologies in this kind of thing. I think this is as regards what has happened so far, and apart from that, we had our first merchant banking activities. We took a startup to the NSE SME platform, which got listed, and it was oversubscribed nearly 1.5 times. That was an encouraging start for us, and so we're working at taking our merchant banking also to bigger level. Apart from that, I think we are working on relationships on the line of SBI, like like the e-commerce relationship they have established. We are looking at possibly, so at this stage it will be premature to say, but possibly a platform of platforms, which should drive Mudra businesses, which should bring value to all the banks in the system, which should bring value to all the non-banking companies and all other people who participate. Idea, sir, is that if I recall the discussion at the President House on 17th of March, that SME actually is less risky. It only suffers from lack of information. And today, now, with the big data coming in, with the kind of analytics available, e-commerce players are addressing it, fintech companies are addressing it. So we expect the rates of interest to be driven down if this platform things is rightly, conceptualized and brought to being. I think, looking at the time, I would just limit myself to this only. But we are working on creating few more new initiatives within this year, especially utilizing the new players like small finance banks. Out of the 10 small finance banks licensed, 9 are SIDBI's direct clients, and one is, I'm done, yeah. One is related to, it's a group company SIDBI clients. So we are looking at how we can make sure that they work successfully. So we organize a conclave of all the SFBs, where a number of ideas were, we brainstormed how to make them effective player, especially in what we call as the missing middle segment. Missing middle is the segment which is just higher than microfinance, but lower than the ticket size which the banks would take, say a loan up to between 1 lakh to 10 lakhs. So we hope SFBs will play a big role there. With that, I would end. Thank you very much.
Thank you, Mr. Kapoor. So I think because time is short and we were allotted 1 hour, but it's still like maybe 1 or 2 quick questions and quick answers, if there are any. Yeah, please, if you could just introduce yourself and Mike. Here.
Sir, myself Hirawat from Walford Finance. The major problem of SME, as you rightly said, delay in receivable. If you go to history, this problem was very big in export sector also. And once we created ECGC and then subsequently that business was taken over by the other insurance companies too, by and large this problem was solved. Can't create a such institution like ECGC for a domestic sector too, so that this problem can be taken care? Thank you.
I think CGT MSC is already there, which guarantees credit up to 1 crore.
Yeah. So we have, besides CGT MSC, a new company under SIDBI fold, or rather managed by SIDBI, called National Credit Guarantee Trustee Company, which is in the process of establishing, I think it's in very advanced stage, software is almost ready, a factoring guarantee fund, which would be basically, unlike CGT MSC, which is for banks, so this would be open to the factoring companies, factoring entities, and this would provide guarantees to those financing receivables. I think that's what you meant. So factoring guarantee fund by NCGTC.
Factoring requires a proper bill acceptance from the otherwise.
No, factoring is generally without bills of exchange. The factoring is generally without bills of exchange. It is traditionally, the only thing is that the government wants us to lay higher emphasis on without recourse factoring. At the moment, without recourse factoring is minimal in the country. So government wants to encourage that, and so they have put a condition that the guarantee fund should try to strive at 50% of its guarantee going to without recourse factoring, and this would be of interest to the corporates who have suppliers in off locations who today are not willing to supply to them. So corporates should look at that somebody whom they are not exposed to, you say that this new system is coming in, and that would help you reach out to suppliers in the hinterland.
So I think we have to close session. Madam is asking. There's one final question, please, quickly.
Yes. Question for Mr. Paliwal. You spoke of timeliness of loan sanctions. Could you tell us what the RBI guidelines are on turnaround time for banks to give loans of various ticket sizes? What is the recommendation, and do you regulate that?
Well, for that 2.5 million and above, we said that for the application from the time it has been received, BCSBI, that is the Banking Standard Code of India, has suggested within 6 weeks the decision should be taken and conveyed. And for loans which are below that, 3 weeks' time. But these are the outer limits. So, and if at any point of time, like so the first part is that if there is a non-adherence to the code, the first and foremost is the entity from whom the loan has been sought, and if not thereafter, there is a banking ombudsman available across the country. We have 15 offices, and we are extending the scope by opening 5 more offices for that. So.
One only, that our portal would help us to monitor this requirement, that any bank which comes on there. So we would encourage MSMEs for this reason to use the platform, because it becomes so transparent, where the timelines can be observed and monitored by Reserve Bank, regulator, government, anybody.
The tracking of applications are there, madam. It's electronically can also be applied, and application where the status of the application can be tracked.
So I must thank you, Mr. Paliwal, Mr. Brahmaji Rao, and Mr. Kapoor, and all the audience here for giving a very patient hearing. And I think we have overrun by 15 minutes, but original time we have not overrun, 1 hour 20 minutes. Thank you very much.
Yes, so we have wrapped it up in the allotted duration. Thank you for that as the chairperson, I would say. And before we close, sir, we have one very significant gesture for all of you. I would request Mr. Chandan Bhattacharya, chairperson of the Banking and Finance Committee, IMC, to present a memento to the chairperson of this session, Mr. Rajneesh Kumar, Managing Director, National Banking Group, the State Bank of India. So kindly accept this as a token of appreciation and gratitude. Thank you, Mr. Bhattacharya. And now I request Mr. Rajneesh Kumar as the chairperson to offer mementos to all the speakers, beginning with Mr. U.S. Paliwal, Executive Director, Reserve Bank of India, Mr. K.V. Brahmaji Rao, Executive Director, Punjab National Bank, and Mr. Ajay Kumar Kapoor, Deputy Managing Director, SIDBI. Thank you, gentlemen. It was indeed an engaging session, and I'm sure you all will agree with me. Well, you can take your seats in the audience as we will begin the next session immediately. Ladies and gentlemen, there is no break. We will just set the head table. That will be done within a minute or two at the max. Session 4, the last